It's been very quiet so far this week, and now we are heading towards this midweek break. What's the setup looking like to you?
No, I think if you really see the market in the short term, or if you see the last few weeks, the markets are trading in a range, and I think it's finding it very difficult to kind of break out of its range as such. And I think it's essentially, my own belief is, well, you have these global factors which keep on playing the role, and you've seen FIIs being sellers and so on and so forth. I think fundamentally, I think the market is looking for more fundamental cues from corporate earnings for it to be able to break out of the brand as such. Now, if you really see the earnings season that has been gone, just went by, it really did not provide any sort of direction. It was another quarter where you found earnings, the index earnings being almost flattish as such. So I think so we are in that zone where what you're going through is some sort of a time correction phase after the kind of heady rise that we saw last year and somewhere at the beginning of the year. And it's going to be a bottom-up stock pickers market, even in the near term, and that's what you're really seeing. You're seeing the broader market probably doing better than the Nifty and the other indices.
What's the greater probability? Right now we're in the range, but do you see a greater probability of a breakdown? Because we're running into, as you said, winter session and no one's expecting any kind of great fireworks. Or do you actually see a possibility somehow of a break on the upside of this range?
Well, to be honest, it is difficult to call at this time. You have a number of things happening. So, one is, as you said, the winter session happening. If the government is able to reach out and is able to get the GST bill through, it's a positive. You also have the US Fed meeting in the mid of December. In all probability, they've kind of indicated that they would like to, kind of start the whole process of raising rates. However, against that, there is another train of thought which says that, the recovery is not what it seems, and it would prevent the Fed from kind of raising. So I think right now it's open season which way the market could go as such. My own view is that that the market, while it even if you have all the negative news, whether it might even break the trend downwards, but it's not going to go down sizably. And so the belief is that I think this range is going to continue at least till we get into the next quarter. However, you will also see typically is that towards the third week of December, when most institutions are away, you do normally see a little bit of propping up of the market take place, and especially in the mid caps and the so-called more broader names and not the index names. As a run-up to possible FII buying, which normally are fresh allocations that take place. Sure. So so you have both sides happening. So it's very difficult, to be honest, to call at which side of the range it will break.
Okay, absolutely trapped in that range. Well, while we're talking institutions and what they're doing, let's quickly run through today's fund flow picture. So FIIs continue to be on the sell side, and their sale at 540 crore rupees today has actually overtaken net stock purchases from domestic institutions. DIIs have bought shares worth around 532 crore rupees. So their purchases definitely not enough, and the FII selling outweighing the domestic institutional purchases that we've seen. That's on the fund flow side. Now let's come to some deal news and get down to specific stocks that are going to be in focus on Thursday.